Good day, fellow investors. Free stocks to buy September 2021. But before digging into the free stocks to buy, I really want to discuss the concept of stocks to buy. I would prefer to say stocks to own for a long-term investment portfolio, but YouTube forces me to put stocks to buy because that's the most searched word on YouTube. And just to give you a perspective on stocks to buy and what to expect also from my future stocks to buy videos, subscribe for that. 2 years ago, I made a stocks to buy copper video. If not, you will regret it in your portfolio. And maybe you've seen this video. It was made on 17 September 2019. I also discussed other companies 2-3 years ago like Lundin Mining, made a valuation, and I thought that owning something like this, and I did own Lundin Mining, was a good idea for the portfolio. But 17 September 2019, when I said, okay, buy copper stocks, and if we check Lundin Mining Corporation from 17 September 2019, let's say I made the video here, so I said you need to own copper stocks, and then 6 months later, 7 months later, the stock was down 36%. That is looking for stocks to buy. Of course, then the thesis finally developed and I bought more here and sold somewhere a little bit too early, but okay, then the thesis developed and the investment did good. But when it comes to stocks to buying, I prefer to say stocks to own. Then if you really know the business and you like to own a business, then when this happens, like I did exactly on the 20th of March, if I remember well, I bought much more Lundin, and then I rode the wave up, which was something of a development of a thesis. This is a pure cyclical, so I'm watching, and I'll soon update also on my stock market research platform, which is something I do professionally, so I'm a stock market researcher, and the free stocks I'll discuss are exactly from there, from my stock market research platform. So if you want to see much more stock analysis and in-detailed analysis for businesses that I think are good businesses to own long-term or watch or even buy here and there, please check my stock market research platform. There is a 28-day money-back guarantee, so feel free to check it, see if it fits your long-term investment requirements, and if it fits, I think that for, what is it, a little bit more than $1 a day, my full-time job will give you a lot of value so that you can focus on other things and not even spend time watching YouTube stock to buy videos. And that's also what I focus there, and also will discuss in the coming free stocks to buy now. I focus on owning businesses, no matter the short-term stock up and down prices. I don't know where will stock prices go. I know that if I buy a good business and the business develops over the next 3, 5, 10 years, I know that the stock market investing returns will follow. That's a given. That's one of the few certainties I have when it comes to investing, that I've invested in a good business and stock will follow. Where will stocks go? What will the Fed do? That's irrelevant, or even better to say, impossible to predict. So let's immediately start with stock number 1. Alibaba, already discussed, made a few videos on this channel, and I think it is a good business to own. Where will the stock go? Nobody knows. The lower it goes, the better buy it becomes. Also, for investing in China, I've made this video, the Chinese investment framework. All the videos mentioned and the links to the detailed stock analysis will be in the description of this video below, so you might dig deeper if you want. But let's discuss Alibaba stock. The performance since I made the first buy video of Alibaba has been, let's say, terrible, 26% down. It's been accumulating recently a little bit, but the market capitalization for a company like Alibaba is now $450 billion for Alibaba, and this is the business ownership perspective. This is the key. $450 billion for Alibaba. But what is Alibaba? When I think of Alibaba, I think of two things. The e-commerce business and all the other businesses in China, and the global expansion business. Before starting the valuation and show it the model, I think that in 10 years, the Chinese business will be worth 1 trillion and the global business will be worth 1 trillion. That's 2 trillion from the current half a trillion market capitalization. So that's a 4x over 10 years. 2x to 10x can be, that's what I expect from Alibaba. If I go to my tables, this is the premium one that I have on my stock market research platform. There is also a free one, but you can see here how I value stocks. I have taken a scenario here with 25 billion in free cash flows that they seem to be doing now, 5 billion down or up, but investing a lot. 25% growth rate for the next 5 years, 12% from the 5th to the 10th year, a discount rate of 10% and a terminal multiple on the cash flows of just 15. That's pretty conservative, and the intrinsic value for a 10% discount rate expected return is 700 billion. If I change the expected return to 15%, we are exactly there. I expect a return from Alibaba of around 15% per year over the next 10 years. So it could be worth 2 trillion. And we can see that the stock market capitalization is exactly there. Of course, in an exuberant scenario, if it grows faster and if the market gives it a higher terminal multiple, then we can see 4 trillion, which would be an 8x. And the present value for a 15% is almost twice the current situation. In a worst case scenario with slower growth, a terminal multiple of just 10 on cash flows, which sounds ridiculous, but then we could lose again another 50% of the investment. And I said Alibaba can crash to 100. That's a given, and that's my negative scenario. But the stock price is one, business developments are another thing. They are building their hub in Europe, they are entering more and more this international game, and I think given their tech and everything, they'll be good players given their Chinese connections. So that's why I consider Alibaba a stock to own now. And another thing here is, if you buy here, 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 or here, of course your returns will be higher the lower your buy. But if the stock goes to 600 in the next 5 years and you bought at 270, you will still do good. You'll do better here. But projecting this is impossible to estimate. You have to buy, or at least what I do is I buy stocks when I like owning the business at a certain price. And I'll accumulate. I received about 6,000 of dividends last week and I invested that back into Alibaba. So check out my other videos on Alibaba and let's go to an American business that's also interesting and that I also own, which is Intel. I made a deep dive analysis already a year ago and certainly time flies fast, and a year later Intel stock is not far from where it was. So there was the dividend of 2% something. It was at one point 40% up when my stock to buy decision looked very smart, but it was also down 10% when I would get many emails how stupid I am. Now no emails because nothing really happened there, but I still consider Intel a good business to own in a diversified portfolio. On my research platform I have various portfolios, and depending on the risk reward there is one with 20 positions that I manage for those needing more diversification, and I'm completing that portfolio over September, so there will be good businesses if you want more diversification, and Intel is in that business. Why? Because Intel is now, from a cash cow that it was a year ago, positioning into really the growth of the semiconductor industry and really diversifying away from China and the chips there. We are in a chip shortage, as all the news are showing, and then you think, okay, with all the intel that Intel has in that tech segment, will it do good? Is it worth, if we look at the market capitalization, Is everything that Intel does, has done, owns, Mobileye, everything, is it worth 215 billion on a price earnings ratio of 12 and a dividend yield of more than 2.5%? Growth ahead. Let's go to my table. Where do I have Intel? Here do I have it. And if I look at Intel, I have cut the free cash flows from 2021 to 2025 because they are investing a lot of cash into the new fab businesses, etc. But I still think they are still making buybacks. They did buybacks already, dividends, so there will be some returns to investors. I have assumed the growth rate of just 6%. TSMC assumes 15% for the next decade, terminal multiple of just 15, and a discount rate of 10, and I get to an intrinsic value of 248 billion. Thus, for a 10% return, Intel is undervalued. In an exuberant scenario, it can easily double. There is also risk, but then again, the terminal multiple would go really, really low over the long term. But this is investing, and depending on the business developments, we'll see what will happen next. The top stories are there, and Intel is a business. There will be ups and downs, and the key question is, do you want to own a business like Intel in your portfolio? This is a value investing channel, so all those high-flying chip producers, Nvidia, and that's not for me because of the risk. I like the 20 billion Intel is making in cash, and that's a margin of safety for me, plus the tailwind of the industry. See how it fits you. And now, stock number 3, Fomento Económico Mexicano, which is traded on the New York Stock Exchange and is a business that is exposing you to Latin America, Coca-Cola, Heineken distribution, defensive sector, food, health. So very interesting, growing really, really good, and flying under the radar, thus a value investment. This is another stock you can see here. If you go check the curriculum on you can see the covered stocks, and I'm constantly adding, constantly improving this. And one is Fomento Económico Mexicano. I just updated this, but I wanted to film this before the earnings update to really give you an overview of the company. They have a lot of businesses, from Coca-Cola bottling and distribution to other beer distribution to health businesses, and this is the business overview. And they also own 15% of European beer company Heineken. They have been investing in gas stations, fuel division, health division across South America, so it is a company really giving you exposure to South America. They are opening constantly new stores, growing there. They have been a company that does a lot of acquisitions, and they have been really, really good with those acquisitions. So constantly acquiring things, scaling on their ecosystem, which shows that they are a nice business and really growing at staggering rates. They have been, of course, hit by COVID, but as they penetrate more and as they create the ecosystem, as they collaborate with more and more businesses in Mexico and Brazil and other countries, Guatemala, Colombia, then the upside should be really, really good. Also, I like this, for example, health division, stores entering those markets that are still not penetrated like we are used in the West. And the key is, what they are searching is to have a leading position which enables economies of scale, higher margins, which is always a good business to own. And if we look at the growth, of course, some devaluation here of currency, but revenues have doubled, net income has doubled, then was hit by COVID and other currency rates, but the underlying business is constantly growing. And if I check again my list here, Coca-Cola, FEMSA, I have used the dividend as a valuation matter, 7% growth rate, 10% discount rate, 4% expected dividend, which is higher than the current rate. The intrinsic value is 18 billion. If I look at the market capitalization, 27 billion for a 10% discount rate, but I think it might even grow a little bit faster. However, my valuation doesn't include the 15% stake in Heineken, which is again around 8 billion, so it's fairly priced for a 10% return, even a little bit higher. So there was exuberance in the early 2010s, then the stock stagnated, COVID, and accumulating here until the next Latin American exuberance round might give you really good returns. So thanks for watching. Consider subscribing if you like this attitude of stocks to own. If you like everything delivered on a silver plate, check my stock market research platform, where I show what I do, my portfolios when I buy something, and also the in-depth research with investment updates. Thanks for watching, and I'll see you next weekend in new videos.